What's up everybody, Tom here with another video. Today we'll be talking about the latest stock market news along with our technical analysis thoughts on the S&P 500, Nasdaq, volatility index, US dollar, gold and silver. The stock market has just hit a critical level and bounced off that zone. The question is, where does it go next? We'll be taking a look at that and more in just a few minutes. Stay tuned. So guys, what happened over the last 24 hours? Well, as you know, we like to look at the last 24 hours to get an idea or an insight in what might be happening in the market over the next couple of days. We did see yesterday bullish return in terms of it opened low and it had some movement up. And it wasn't necessarily led by the tech stocks, the FANG stocks as per normal. If we have a look at the Nasdaq versus the S&P 500 and the Dow, overall they all picked up in the morning, followed by some weakness after that point, which has been pretty normal for morning trade. And then at the end of the day, the Nasdaq ended up down 0.72% and the Dow and the S&P ended up basically flat, and they had fairly strong buying into the close of the day. That is a very important factor when we're looking at our analysis. Remember, whatever happens at the close is the most important indicator to what we're going to be doing in the market over the next session. When we take a look at the sectors overall, energy was the interesting one. Ended up, the best sector for the day, up 1.21%, but it opened down 2.5%. So energy sector coming back into phase due to oil moves. And we did overall see most of the sectors moving in conjunction with each other. Probably notably is the technology sector was the second weakest sector of the day. When we look at the 5-day average, we of course can see that the energy sector is only just pretty much regaining what it's lost over the 5 days. And the tech sector is still the best performing, but nowhere near as much as it was on the 10th. And why is this? Because of course, the Apple event hype and also the Amazon event hype have now died off. And this is what we're seeing quite a lot of times. Remember, buy the rumor, sell the fact has been happening a lot in this market. And if you take a look at Tesla, which we'll have on a chart a little bit later, it might be doing a very similar thing right now. So let's take a look together at some of our key indicators of market sentiment and what we're seeing. CBOE market put call ratios is always something good to be looking at to use as a bit of a contrarian view of what the current market situation is. We got a 1.6 reading on it yesterday, and that is down from a 2.05 the previous days before. This is for the S&P 500. When we take a look at that on a chart, you'll notice here that it was getting down to the magical 0.6 level. The 0.6 level has been a great zone for us to generally be looking at shorts in the market. The idea is that if everybody thinks that the market is going to short or go down and becomes bearish, that basically will not happen. When we have high put call ratios, the market doesn't sell off. When we have very low put call ratios, so we have less people with open puts in the market and more calls, there's more likelihood that Wall Street will get involved and of course steal the money from us, the retail traders. And that is not where we want to be as traders, that's for sure. On to volume, another key thing that we look at. Volume is pretty normal this week for the S&P 500. Obviously a little bit weaker on the 12th. That's to be expected due to the public holiday in the US. And I think mostly the story is about some of the key charts. Now, we were doing our live analysis on Tuesday and we were talking about this 93.40 level. Well, it's very interesting. The market bulled through this zone straight after, of course, Goldman Sachs, our good friends there, said sell the dollar. We started to see strong movement in the dollar. Now what's happened is we've gone up to our key critical support resistance zone of the 93.86 period. Notice we hit the previous resistance and find resistance again. And this is all on the 1 hour chart. If we go down to a 4 hour though, you'll notice why this is such a key point. Resistances, resistance, resistance, and of course resistance again. Now, if the dollar index is able to break out of this level, we maybe see it pull back, move out, and then come back down and test it. This will actually be very bullish for dollar index. It's really a critical point for dollar index. It will also signal to us that maybe something's a little bit wrong with the current pricing of the US 500 or the S&P. This would mean that we're seeing strong dollar, and generally a strong dollar means weakness in the market. We've also got a couple of other key things, a 2050 exponential moving average cross, another key indicator for us to use on the US dollar. So you might be asking me, well, Tom, what else are you seeing? Are you seeing enough bearish indicators here? Well, it is a mixed bag across the board, but there are key things that we always look at. One of them being Dr. Copper. Here we've got Dr. Copper, and Dr. Copper saying all green, all good in the markets. We're basically testing back at that 3.0950 zone. We've got a double bottom here on the smaller time frames and bullish intentions right at the resistance now. I would expect that if Dr. Copper could break through this zone, we will most likely see strength in copper continue, and that strength should easily break the previous resistance. The previous resistance won't really care, I think, if we get through this level. Now, important thing about copper, if we're seeing strong copper growth, that's usually incredibly bullish towards the S&P 500 and towards economic recovery. So copper is telling us something a little bit different than the US dollar. Overall, we have right now mixture on the put call ratio. Couldn't say too much there. Dollar is looking strong, but at resistance, and copper's looking strong and saying, okay, the market is looking pretty good right now. But what about the VIX? What is the VIX or volatility index or fear index telling us? Well, we're still stuck in the range, aren't we? Between 25 and 30, we've been stuck in this range now for ages. That gets me excited as a trader and investor, because if we break these ranges, it could be explosive, especially to the upside. Remember, we've got this 5-point range here for the CBOE VIX contract, and that would really say that if we closed out above 30, we'd be basically going to a 35, creating a lot of bearish sentiment in the market. For now, we're stuck in the middle of the zone. We got as high as 29 yesterday, and then of course sold off that level. We've got a 2050 exponential moving average, but we are in a channel, so I wouldn't use the moving averages as much as I usually would if we were in a trend. Overall, we're still stuck in the range, and the VIX is showing us there's still a lot of fear and uncertainty leading into the US market election. Another couple of things that are really interesting is the gold is rising even though the US dollar is strengthening. So we are seeing gold actually going up off this trend line. This trend line has now held a few times. In our previous video, we discussed about how this is so critical for gold to hold this zone. If it didn't hold this zone, it was all bearish, but it did so, and it did so again. Now the key is to break past the previous peak. This will show strong bullish momentum. The reason why is we have a trough here, we have a peak here, we have a higher trough here, and the sequence of a lightning bolt effect, which is what we talk about a lot on this channel, is that we are getting a higher peak and a change in momentum. We're also getting a cross of the 20 and 50 exponential moving averages on our 4-hour swing chart. So for gold, a break close above this zone. Let's just quickly draw that up together right now and get that area. So we basically have a 1912, 1913 level. If we break and close above that zone, what that's going to mean is we're probably going to go up, hit the 200, simple moving average, come back down, and then hopefully move up and above. This key level here is going to mean a lot for bullish sentiment. If we break through the bottom of this trend line here, we are going to go bearish. That will be a very bearish signal, and generally bearish signal on trend lines do something like this. Come back and test the trend line from the bottom up, and then of course go on and make new lows. We've got that 1850 and of course those 1870 area around here as well. Very critical time for gold on the markets. So what about silver? Well, silver's also been coming off a trend line of such. This is again the 4-hour chart. We saw silver bounce off that zone yesterday and find some level of buying pressure. Not as strong buying as gold overall. There's been a lot more gold bulls than there has been silver. Same kind of thing applies for silver. We need it to hold the trend line and of course close above this 2462 area. If it cannot do that, we are probably looking at bearish momentum for silver and some very nice down moves, especially if, of course, the US dollar breaks through and above that key resistance zone that we were looking at before. So what about the markets in general? What's happening on the S&P 500? Well, as everybody knows, we like to use the SPX and we're using the 4-hour here. Now, I actually drew this Fibonacci for everybody yesterday and posted it as a comment as we didn't make a video yesterday on the markets. And I said that it was most likely possible that we would hit the 20 moving average and the 50% Fibonacci, which was syncing up with that. Now on the real market, you'll notice it did hit this zone and it body closed on this zone in terms of we actually saw it open right on the support. Now that's very important. It just shows how great the SPX is for doing your technical analysis. 20 exponential moving average was hit. It went through a little bit, strongly rejected that zone, and now we've moved a little bit bullish, filling effectively the gap. So all we did yesterday was we filled the gap from the futures trading, which was bearish, and then moved all the way up to basically end flat for the day. The importance of this is that we didn't actually end up making a new high. All we did was we put on what we lost in the futures, but we did get a very, very nice little entry zone there for intraday traders. What next for the S&P 500 though? Well, if we take a look at the futures contracts, we'll notice that things look a little bit different. In specifically, if we have a look at the actual futures daily trade, it looks like a bullish hammer. So if we're looking here, here's our bullish hammer, and it looks completely different to the SPX. Now, if you're trading a bullish hammer, what do we know? Well, we know one thing. We want to see the market get above the bullish hammer by a certain percentage. We obviously need the market to show us slingshot momentum. You won't tell me how many times, and I'm sure you've seen it all out there, and where we've had a bullish hammer or shooting star or pin bar, or whatever you want to call them, and then the market has failed to make a new high. Over here, we had one that made a new high. It came down, got very scary, but it continued on. When they fail to make a new high, it doesn't show as much momentum and bullish pressure in the market. Remember, this is meant to be like a slingshot trading technique. Effectively, the hammer comes off a key level, key fib in this case, and then continues on. If we take the direction of the trend overall and we consider that this is still an inverse head and shoulders, it's not completed yet from what we expected. We expected that the market would at least go and test previous highs. And this bullish momentum and pickup yesterday is certainly leading to that. If we take a look at what's happening in the Asian session, we're up 0.27 on the day, about to make a new high. And if we do get a little bit of a close on a significant time frame above here, I think that would be relatively bullish on the market. Then we'd probably be going and testing at least the 35.50 zone from, of course, the bottom up, and then finding some selling pressure most likely here. We're still stuck in the general trend though, and that general trend has been bullish for now. Whenever you see a hammer like this though fail, if the market does come through and close below this zone, it's so bearish. It won't even care about this support zone anymore. It would just go bearish continuously back into the range. So we're still stuck in zones, but overall the market's looking more bullish in my opinion than bearish from the perspective of yesterday's trade, from the perspective of course, the futures contract and what people are seeing, and the price momentum that we're seeing going into the weekend, coupled with that closed price. US 100, more of the same. If we go down to the smaller timeframes here on the futures contract, you'll notice that it's right at those kind of two moving averages on the 2 hour. If we go down to the 1 hour, basically the momentum is moving forward. I would expect some selling pressure around that 12,000. We hit the 11.8. Remember, we've talked so many times about how the Nasdaq is trading 200-point ranges. If I was to pick the best thing to do on the Nasdaq, it's to look at 200-point ranges and see how the market interacts with these zones. Every 200 points has been a significant resistance or support most of the time throughout these last couple of weeks, if not months. And that's why I don't mind trading the Nasdaq off these areas. If you're an intraday trader and that's what interests you, potentially bring up every 200 points and start looking at that from an analysis perspective. There's plenty to do here, but overall I still think it's led by the S&P 500, and I'd be continuously looking at the key levels there and then going over to the Nasdaq and looking at zones as well. Always get the S&P 500 as the lead indicator for what's going to go on. A couple of other things to note. We had Tesla breaking out, as in Tesla actually closed at a 462 handle here on the 14th of October. So it was actually looking pretty strong. Now that we're on the 15th close, it came back down and tested it. This is technically a breakout for Tesla. We have not had a price where it has gotten above this zone. Look, it even got to a new high here off previous closes. We had body closes, we had everything that we'd usually be seeing for aggressive buying potential. I'd be looking at this particular stock from this level and just seeing whether it can hold this zone. We're basically testing now the back at the 20 moving average. we're finding some bullish pressure there. And I wouldn't be surprised at all to see some bullish intentions come back into Tesla now that we hit this level. It could be a fake out, but at this stage, it is looking relatively bullish from that initial breakout on Tesla, heading into, of course, news events over the next couple of weeks, if not months. Remember, buy the rumor, sell the fact has been a thing in the markets. We hope you enjoyed this video today. If you did, remember to subscribe and of course hit that alert button. We'll be coming right at you on the weekend with a whole bunch of new videos. And of course, live Monday bell session will be there. So make sure you come and join the rest of the trading community and have a great time hanging out, discussing those trades, and of course, discussing key technical areas. We'll see you then. Bye for now.